If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you.
All right, how's it going?
It's going pretty well. I'm finishing summer. Both my boys are going to college the next week. I'll be an empty nester for the first time.
Congratulations.
Yeah. I'm excited to get them off onto their life and then figure out my next chapter.
And then figure out your life.
Right.
Yeah.
Exactly.
Who am I when they're not home?
Yeah, that's right.
Yeah,
that's
it's
right.
a big deal. I had a great week in San Diego. Thanks for recording without me. And, thanks to Emily for filling in.
Yeah.
And then kind of came back and was in town for all of a day and a half and had to go right to Boston. Did a keynote at Huron's What's Right in Healthcare event. Mm-hmm. And it was good. It was an opportunity to synthesize and package a lot of what we've talked about over the course of the last 2 years on the pod.
Yeah.
And it's the first time I've done that and like gotten up on stage and presented it. And it was it was really well received, but at the time that I was delivering it, I couldn't fully tell if it was really well received because about halfway through I realized how heavy it was. You know what I mean? Like there's
a lot of change going on.
There's a lot of change. And I just felt obligated to frame that change in a narrative that could help that audience of healthcare leaders to like understand the change. Because I feel like, the thing about healthcare, you and I, we study it, we invest in it, but we don't work in it. Right. And that's a privilege that we have, that we get to do all the fun parts without the like actual being in it. So like one of the parts I was talking about during COVID and talking about listening to Joe Rogan and All In, and as I was recalling that, I also had to be like, and if you worked in healthcare at that time, you probably didn't have time to listen to this podcast because you were in crisis at that time
and taking care of the country. Yeah,
exactly. And so there's just kind of this this sense of obligation that comes with the privilege of studying it, knowing it, but not being burdened with having to be so deep inside of it. You know what I mean? Like I know well enough to, get certified with HFMA about the business of healthcare and to invest in companies and talk on stage. But like if I actually had to run revenue cycle for a hospital for a year, like I would lose a lot of the time that you and I have to do all this fun stuff, right? So
and we don't have any patients coming in tomorrow morning that need our assistance.
Exactly. And so it felt like an obligation to sort of say, hey, you've been really busy running the business of healthcare while like all this stuff is happening to you.
Yeah.
So let me try to help you
understand.
But
at an event like that, it is part of the purpose for them to kind of pick their head up for a minute and see where are we headed.
I think so.
Yeah.
I think so. And what I picked up from it was that what we cover on this show really it's not any one section, it's the collection of the different topics
and how it all kind of fits together over time.
How it fits together over time. Like what's the broad narrative that makes these things that seem like they shouldn't fit really well, especially in a Trump administration, right? Like it's in a Biden, it's almost like it was really good that we were like covering the Gary Gensler stuff, because you would not understand like what the heck is happening with crypto today if you weren't tracking all that stuff over the last year and a half, right?
Yeah, definitely. The Trump is unprecedented in the pace and the number of things, and also like having the perspective of covering healthcare under Biden, you sort of appreciate it more,
right? Because
of all the differences.
I have a question for you before we do actually start covering everything. Do you think that after Trump is no longer in office, like, do you think things will slow back down, or do you think we have just established a new baseline speed? Because like one of the things I was noticing in my talk was Trump is a central character, and there's absolutely no way to, he's very tip of the spear. There's no way to talk about what is happening and not talk about him.
Right.
And anyone who tries to do that, like it's fruitless, because you can't, you really can't do it. But there's also this confluence of other forces, and it's like he is going to deregulate, which is going to speed things up even further and give all these other things more and more momentum. It's like after he's gone, do we still operate at this, at this pace? Even if it's not coming out of DC, like there's still a million things happening in the world all the time. Like, so what do you think?
I don't think we're going back to the slow, like methodical world. I think that it will be almost worse because you won't have one dominant figure in the Republican Party, I don't think, that's driving it.
Right.
So you're going to have a bunch of kind of balkanized groups, but I don't think the pace is going to slow down. And then, ideally the Dems will get their act together and have something to say as well.
Have you tracked Newsom on X lately?
No.
So for a long time, I felt like because of the California thing and some other things, like he wasn't viable. Dude, he to me looks like the only thing remotely close to viable right now. Like what he is pulling off on X is meeting the moment so well. Like the entertainment, entertainment value, the bravery to like actually be a counter force, and to be all in and like put the full weight of whatever leverage he has as the governor of California, like all in on it. It's unbelievable. So he's created. We're not covering it here, but he's created a press office account on X, and it talks in Trump. So, like literally everything is all caps. It's like they basically got an AI and said, "Hey, take all the Truth Social posts, and we're gonna feed you stuff and spit it back out to us in Trump, so we can then like use that for the." And it's thank you for your attention to this matter. Like all the things, everything is all naming, coming up with names for everyone, the whole thing. He's just doing the whole thing, and he's calling himself like America's favorite governor, and all. It's funny.
I need to check it out.
You need to check it out. It's like, okay, game on. Like we got somebody who.
Well, the first thing he did was he'd had that podcast. He may still do it, where he pulled in like the guests that were against him, like really, the anti. Gavin Newsom crowd and interviewed them and like was willing to go kind of in a long form, hour long with people that don't agree with him. And I thought that was brilliant because it doesn't matter how he does, just the fact that he's there, discussing these topics at whatever length the guest wants to go at, and holding his own is the point, I think.
Yeah. So anyway, I just, that was kind of the big thing for me this week on X was like Gavin Newsom, I think is actually the only credible opponent. Only credible opponent. Okay. With that, let's dig in. Starting with the economy, inflation kind of boring, holding steady at 2.7 in July. Went up a little bit. So the core is 2.7. You add in, food and energy, and you're at 3.1.
Yeah, it was a little bit better than expected, but up.
Right.
Inflation's it's pretty low, but it's ticking up slightly. So you can sort of have whichever way your bias is. You can say, well, it's slowly coming up, or you can say it's still under 3. And what I would say is it's under 3, and I don't care.
Well, we know what you would say.
But it is up.
Powell continues to have the fuel to justify his past decisions.
Yeah, that's right. And I think that a lot of people in Poly Market and other places feel like September is going to be a cut.
Yeah. Well, I think that they feel that way because he really should have cut last time.
Yeah.
He really should have cut last time. That didn't do him any favors. Okay. U.S. stocks Amble to fresh records on optimism for a September rate cut. So this is your next story.
Yeah. So S&P and NASDAQ are at all-time highs. The Dow is right there too. I mean, everything is high.
Has there been anything more consistent over the time we recorded this show than stock market all-time highs?
No. It's been
across both administrations.
Not every week, but but
across-
once a month.
Once a month
I
for
mean, it's-
both administrations.
That's right. Yeah.
All-time highs.
Yeah. And it's U.S. dominant,
Still Max 7.
developing country dominant. The developing world is lagging, and small businesses are Russell's lagging.
Yeah. Yes, it's
Yeah,
still
Mag
7.
Right.
Still Mag 7. All right, moving on to VC. Long list of
Lot of
pretty
VC
sizable deals.
Yeah.
Isaac Health secures $10.5 million to advance technology for brain health and dementia care. This is it's an AI platform. I appreciate that it's not called Isaac AI,
Right.
but it's an AI-enabled brain health platform, combines expert clinical care with scalable digital infrastructure, patented AI screening capabilities to detect, diagnose, and manage dementia from home.
Yeah, that's right. And I think dementia, Alzheimer's is a big need. One of the things that was a little bit different with this deal is it started in 22. So it's 3-4 years old, and they're just raising their, A round.
Yeah.
Now
Yeah.
they did a seed round.
All right, Citizen Health Inc.'s $30 million Series A. This is basically an AI Sherpa. Helps you navigate as an individual patient from a patient-centric perspective. Helps you navigate the healthcare industry.
Yeah, that's right. And people are using AI for healthcare a lot. I don't know if you need a separate brand away from just the basic models. And if you did have one, I'd like it to be, where I own my own data, which this is not. But yes, that's a good description.
Yeah, I mean, there's an interesting thing happening right now where, yes, there is a move for people to leverage AI for navigating their patient journey, right? In Sam Altman's,
he had that cancer woman on.
Exactly. Yeah, the couple where the woman, had a cancer diagnosis, and out of a whole, hour and a half thing, what do you spend? 15 minutes?
Yeah. Long story
long
about
story.
her use of AI to help understand both the diagnosis and then what her treatment options were.
Yeah, and it was really important that they had the husband there because he was sort of talking as a witness to her using it. He framed it as it was the only place she found agency in the process, right? Somebody that was there for her and well-informed and powerful enough to equip her to navigate the system and, advocate for herself effectively. So I guess I agree with you, right? Which is to say distribution is going to matter. Yes, we're at the dawn of an era of patient-centric tech, no question. But there's a question of whether or not that patient-centric tech is going to have to come from a healthcare brand in the same way that tech sold to the healthcare industry has previously had to be from a healthcare brand, right? You know what I mean? Or can it just come from ChatGPT or Amazon or Google, or you know what I mean? Like, do you need a dedicated health app for that? It's just a question.
I don't know what the benefits of a dedicated health app are, unless there is some kind of data protection aspect of it. The reason I don't use AI systems for my own health questions is because I don't want OpenAI or other groups to have my cancer diagnosis. I don't have cancer, but I don't have my diagnosis. But this is Citizen is a VC-backed startup, so it's not going to change the data issue.
Yeah, and then it says tells them what they should do next and connects them to it. And no knock. I hope this is massively successful. I'm just trying to play it out in my head, and I feel like this is all going to be part of frontier model interface stuff.
Yeah, I mean it is more challenging than people from the outside would think to invest in AI, because the frontier models are just going to eat up everything.
They're going to eat so many things.
And then they also are commoditizing themselves on pricing. Anthropic, we don't have it. We're not covering it here, but Anthropic offered. So last week, Emily and I talked about it. ChatGPT is offering $1 subscription fee to the government, and now Anthropic matched it. And so, I mean, they're just racing to the bottom of pricing.
And now Anthropic
already.
has memory.
Right.
They don't have it for the pro plan yet, but in a month they will. You know what I mean? It's
That's right.
Yeah. So anyway, Best elected citizen. Reprieve Cardiovascular raises $61 million for heart failure treatment system. This is a device, so large round, but for a device in the Series B. Oversubscribed. Deerfield led it. So congrats to that team. It's
it's a congestive heart failure device / treatment, which is really about sort of water retention, sodium, diuretics. It's a huge opportunity. I don't know exactly. Yeah, exactly.
Yeah, they're continuing on, right? All right, Conformal Medical nets $32 million to complete trial of foam-based heart occluder. So this is a device that's going to help people with reduce the lifetime risk of stroke with people who have AFib.
Yeah, that's right. So I think there's a Boston Scientific product out there that would compete with it. It's an implant. This is more of a foam, but yeah, it's sort of an adjunct to heart treatments.
Yeah.
Tony Robbins and Peter Diamandis, they have a longevity company called Fountain Life. It's like a concierge doc on steroids with all the different scans. Your Pro Nuvo, your Grail.
Yeah, it's a competitor to Grail and Function and
Well, no, I think they probably take all that stuff in and they give you a higher touch with an actual clinician. So. I think it's like pulling all of those different scans plus a dedicated doc. So this is like if you listen to Peter Attia and you can't afford Peter Attia, you go do Tony and Peter's Fountain Life thing, right? You know what I mean? So they raised $18 million, but this is previously they'd raised $80 million, so they've raised over $108 million at this point. And look, I mean, these are two massive brands in the longevity space, and I think. As we continue to see the K-shaped economy, do its thing, this is increasingly going to be where money's going to go.
People want longevity.
Yeah, it's just going to be where more and more money is going to go increasingly. Femtech, Gameto secures $44 million to advance stem cell therapy for infertility and menopause.
This is a new way to do IVF, I guess. So it's not so invasive. They mature the eggs outside the body as opposed to. So I don't know the space well enough, but it's a new technology in fertilization.
I mean, IVF is incredible and has created so many miracles for so many families, and is also very, very difficult.
Yeah,
right. And so more of it, because I know that there's plenty of need out there, but also need to make it
better.
Yeah, make it a better process that's less stressful for the families, right? All right. Arintra raises $21 million to help providers win the reimbursement fight. So this is Series A, and this is another rev cycle management, warrior sitting on one side of the fence or another side. Yeah,
going on in this space. So
yes. Yeah. Okay. Peak 15 Partners was the investor on this deal. SetPoint Medical nabs $140 million to commercialize Neuromod device. So this is that device that we talked about a couple weeks ago.
Yeah, 2 or 3 weeks ago.
Yeah,
they
deals with the inflammation
in the neck, and it sort of wraps around the vagus nerve, maybe, or does something to the vagus nerve to deal with inflation. Yes, and so
not inflation,
inflammation,
inflammation,
yes. Right.
Yeah, that's
exactly.
I mean, so we learned about it 2 weeks ago, and now they're announcing $140 million.
Right,
so that seems like just good PR. I bet they had that round kind of well in hand. Okay, with billions at risk, Nvidia CEO buys his way out of the trade battle. So this is basically a little bit of a biopsy on what actually happened in how that deal.
Yes, how did we get to Nvidia getting to sell the H20 chips?
Right.
And in return, pay the U.S. government 15% of revenue.
Right. So, first of all, there's an aspect of this which is Jensen Huang was effective in convincing President Trump that it was a better strategy, because I think, deal aside, and rev share aside, I think if he was not able to convince him that it was strategically the right thing to do, he wouldn't even have gotten to the part of give us a cut, right?
Right.
So he was able to convince, and probably with some assistance from David Sachs, I would imagine, because I know we listen to BG2 quite often, and Bill Gurley is really big into the you got to let this market play out, right? So
Sachs and Lutnick.
Yes.
I mean, it talks about it in here.
Really?
They the three of them were sort of coordinating on this.
Got it. Yeah. So this is where you feel good about some of the people that Trump has around him, helping him to sort of think game theory, this kind of thing out.
Yeah, I mean, there's a core. I share their belief that the H20 chip is not the cutting edge technology.
Oh, I think that's objectively true.
It's really for inference.
Yeah.
And so if we don't sell them these chips, they're gonna do inference with something.
Correct. They're gonna take that limitation, be innovative,
right,
and create a competitive approach. It may not be a competitive chip, but they'll create a competitive approach, as we've already seen them do with DeepSeek and Kimi K2 and on and on and on. Right.
So I think that's where Sachs, but maybe Lutnick, gave credibility.
Make them dependent on us in the same way we've been dependent on them for manufacturing. Like you know what I mean? Like there's a strategy here that is pretty clear.
Yeah.
But now that we've sort of talked about that, Trump was able to negotiate a deal where the country gets a pretty handsome cut of all the chips sold to China.
Yeah, that's right. So the deal, let's just cover the deal. For the U.S. Treasury, I think, gets 15%, like a rev share of the sale of the H20 chips. And so it's a lot of money, and that is, I guess, good. But two, it is like everything Trump's doing, it sets an interesting / dangerous precedent that, either this is not a national security risk, and therefore Nvidia should be able to sell whatever they want to sell, or it is a national security risk.
Right.
The saying it's not a risk, but in order for us to allow you to do it, you gotta pay. It feels like a tax on exports, which is in the Constitution and not allowed. And so it is not that, because Trump doesn't want it to be that. But it sounds a lot like that.
I mean, Trump is just...
He's a deal guy. He's trying to get money for the U.S. government, which is laudable, I think. But there's going to be another president, and I think it's a little bit of a slippery slope. I mean, I'm happy for the money to come in, but would we sell them a F-35 bomber if they paid us?
I have arrived at the point where it's obvious, not just to me, but to everybody, that he will test every limit. Every limit.
Yeah.
Every limit. So it's not a surprise. It's not even, like, it's almost not worth commenting on, because it'll get worked out in the courts or it won't. You know what I mean? But he's going to test every limit to achieve his goals. That's just it.
Yeah, that's right.
Wall Street Journal, no more offshore. Startups look to spend and hire in the U.S. due to Trump tax change. So this is the R&D tax credits that were in the One Big Beautiful Bill. And yeah, I mean, they're incredible.
So if you are building a software product, the employee costs, the salaries, can be sort of written off right away, just like every expense. But you didn't used to be able to do that. It's over like 15 years normally. So it's having the effect that one would expect, which will be really good for the economy. Probably by next year, we'll start to see it, where people are investing in new buildings, new equipment, and new people to build products today because of the tax advantages. But then that's going to create jobs and construction and everything.
No, look, I mean, I'm so pro this R&D tax credit. I think it's fantastic, because if you want to think about things to do that are very across the board, right, for all businesses that will incentivize nearshoring, onshoring, and also innovation, like especially in the face of, some of the removal of federal financing of those things, like it's not quite circular or quite going to make up for with the organizations that took the lion's share of all that NIH funding, for example. But from a distribution perspective, look, for our portfolio companies, I think we can more aggressively encourage them to invent things, to invent things. And that's always like a thing as VCs we don't like to do because it's a sunk cost and it's hard to make up for. So yeah, no, I think this is great. It was really good. Staying in policy, Vinay Prasad in surprise reversal to rejoin the FDA after abrupt departure. So as soon as you put this link in there, immediately I was like, this is, Marty McCarr just saying, I need this guy. This is my guy. Right. And, whatever happened, it wasn't worth sacrificing him, I think is what it sort of sounds like. And probably, on the way back in, they said, hey, Vinay, like, no more of like, screwing with the right to try stuff. You know what I mean? Like that's the third rail. Don't touch that. You know, COVID vaccines all day. You can give them hell as much as you want, but like, don't screw with right to try on rare diseases. How about that?
Yeah. I mean, I think that's probably right. I think it's also the right answer. Like, there was no reason for Vinay Prasad to be sort of run out of FDA. There's no reason for that. So he's back and he can do his job.
Yeah, I mean, I view, as I've said many times on the show, I view McCarr as being a very strong pick, and the FDA is it's a scientific organization, right? Yeah. And so that is probably an organization that will need the most coaching on the political, on the political hotspots. And I'm glad that they were able to figure out a way to sort of, get him back into the, into the fold. Look, there are a lot of people that are worried about the FDA just mainlining things without enough, regulatory clarity. And I would just say, generally speaking, I don't know his entire, background or philosophy, but I know he is going to be thorough about what makes it through in terms of cell and gene therapy, right?
Yeah.
And
which we'd want. I mean, I think we need to have.
I think so. Yeah, I think so. Right. So again, we want smart people in the job, and we want them to, have the best chances of success, right? Best you can hope for.
And the right to try concept is not in conflict with the FDA being really cautious about approving things. They can run in parallel, aren't they?
Yeah, they can, but I do think it's fair to say that that's a gray area, right? Because those diseases usually are all fatal and often very painful and often diminish quality of life significantly. And so you're already kind of in a really bad place, right? So the risk of taking something that could really harm you,
you're not that worried
about that. Like you're just looking for a shot at any kind of relief you can get usually. So
that's what I mean. Like the fact that someone who is has a deadly disease and is suffering wants to try something that isn't yet approved, I think I'm okay with that. I don't think it has much to do with FDA running a kind of an appropriate process for the rest of us.
Yes, we agree. Okay, moving into the payers. Nearly 6,500 providers reject the Blue Cross antitrust deal. So we've been covering this for like a year now?
Yeah.
Okay.
Yeah, it's a slow process.
Yeah, but it seems like it's kind of coming to a head now, right? Yeah. Where clearly there's a sufficient number of providers who've just said no. Yes. This week it's Mayo, LifePoint, and Trinity. Those are three big brands, big systems. And so that to me tells me, they're mentioning here also, Providence is not accepting it. And so clearly the providers have all aligned and said, we're not going for this.
Yeah. So there's a offer to settle this dispute that the big providers, 6,500 of them are not buying into. The whole thing's likely to fall apart and have to renegotiate or go back to court or whatever.
Yeah. Moving into providers. Cardinal Health posts mixed results, strikes a $1.9 billion Solaris Health deal. So Cardinal continues to move into specialty care. They bought Specialty Networks, and now they have Solaris Health. I think this is really smart. It gives them a full vertical model all the way from, manufacturing of certain devices to warehousing to distribution. They had a pretty big at-home delivery business, and now they're actually, delivering care at the specialty level. Higher margins, more meaningful than just the low margin.
More differentiated.
Yeah, more differentiated. So yeah, makes good sense. The stock is up a little bit now, even though the shares tumbled after the mixed results that were reported.
Yeah, I mean, I think they're doing the right things. It's
transformation.
It's a slow process to transform. It's a pretty big ship. So they do a good job.
Yeah, it's transformation. But I think the high level strategy makes sense. I mean, I'm not sure what else you would expect them to get it. Like, what business would you expect them to get into, right?
Yeah, right.
That they could competently do.
Right.
Providence narrows operating losses in Q2 on volume, commercial rate gains. So this is, an improvement on a pretty bad baseline.
Yeah,
right?
It's less bad than a really terrible 2 years ago.
Right.
So they're making progress, I guess, but they still have some ways to go.
Right. Continuing on, Kaiser Permanente ahead of last year on revenue and profit. I mean, Kaiser
sort of the opposite of Providence.
Yeah, executing extremely well.
Yeah.
Second quarter net income, $3.2 billion, 55% increase over last year's Q2 net income of $2 billion. So, I mean, that's just outstanding. First half of the year is pretty loaded up because they have all the enrollments coming onto their plan. And so, second half of the year won't post, as high numbers, but we'll see how they do year over year. But the CEO did sort of acknowledge that there are challenges out there, Greg Adams. This sentence, I think, is actually I'll read the whole paragraph. I think it's meaningful just from a company that's performing so well. End quote. While we are pleased with our second quarter performance, like others in the healthcare industry, Kaiser Permanente is navigating a shifting landscape marked by an aging population and evolving consumer expectations, as well as the recently enacted federal budget reconciliation bill, which will reduce healthcare coverage and funding as healthcare costs rise, said Chair and CEO Greg Adams. Again, in quotes, to meet these challenges, we are focused on enhancing quality, service, and access, and redesigning our cost structure as we lead the shift toward value-based care that prioritizes affordability and improved patient outcomes. So that last sentence, focused on enhancing quality, service, and access. I mean, I think there's a few things there, right? Access. Do you think that they mean that in terms of the Risent efforts that they're doing? Or do you think that they mean that in terms of leveraging more and more technology? Or do you think that they mean that in terms of, going more consumer? Like how do you think Kaiser means they're going to enhance access in particular? Quality, I kind of get, service I get as well, but access I think is an interesting point. And then I want to get to the redesigning cost structure.
I think they have a commitment to take care of the populations where they have presence, and so Risent is growing is going to grow that to more geographies. But I took it to mean that even though they had profits in the billions, right, 2 billion or 3 billion,
it's ridiculous.
They are not walking away from their commitment to providing access, like we think of Kaiser, sort of nonprofit doing treating all patients in their geography. That's sort of how I took it, that they are kind of reaffirming that they're not just focused on highly attractive segments of the population.
Right. And then redesigning our cost structure. So that to me feels like what all health systems will have to do over the course of the next 10 years.
Yes.
And redesign is not like incremental.
No.
That word is not an incremental word.
Right. Yeah. And so I think that, my interpretation, I don't think either one of us know Greg Adams, but interpretation is that he's saying that enhancing quality, service, and access is going to be done through redesigning their cost structure completely. So they maybe, for instance, they might use technology more effectively or differently.
Yeah. And then as they lead the shift towards value-based care that prioritizes affordability and improved patient outcomes. So, I mean, I think they continue to feel that they are the national leader in that space. And I think that's right, especially in terms of the Risent initiative.
Yeah, I think that's right.
I think that's right.
I mean, that is the model. The payvider model is the future model.
Clearly.
There's a lot of redesign that has to get there.
For as long as I've been doing this with you, this is year 11.
Yeah.
Kaiser's been the model.
Yeah.
Why can't anyone replicate it? Like, is it something core to their culture? You think? That's differentiated. I've heard people say that, especially in California. Now there's other things in terms of the makeup of their ability to own hospitals in California in a way they can't do in other markets, where they just have more of the clinics and the physician groups, but they don't have the hospitals. So they can't deliver the same kind of results, the same margins, same kind of quality of care continuity. So maybe it's like just the setup in that geography. Is that part of it from your perspective?
I think it's part of it, but I think that taking on risk and the payer side of the payvider model is pretty difficult. And I think it's hard for health systems to turn that on and be successful without a lot of investment in technology and data and underwriting and risk and people
who know how to do
and talent. Yeah. And Kaiser has been doing it for a long time.
Yeah.
But they bring the ethos of kind of like I think of it as a physician-led culture, even though they have the whole payer side. So that combination is hard to put together. Right? They're great health systems here in Nashville and around the country that haven't really built up the underwriting strength or the data even to underwrite really. And there are small examples of other payviders, but they don't maybe have the scale or they don't have that culture of physician-led. So I don't know. I think we've been talking about it as the model for 11 years, but it's hard to get.
Not everybody can execute it.
It's hard to get there.
Yeah,
right.
Yeah, not everybody can execute it. Omada grows revenue, membership, and public earnings debut. Drivers of revenue growth include more customers using multiple chronic condition programs, as well as strong adoption of GLP-1 offerings. Some impressive numbers here. The firm reported revenue of $61.4 million in the second quarter, increasing 49% year over year. That's really, really strong. They did recognize a net loss of $5.3 million in the period. But again, they cut that in half. Last year it was $10.7 million. So clearly they're moving towards starting to generate some EBITDA. And then also their membership numbers are sort of right on par with those revenue numbers. So the firm had 752,000 members in the second quarter, up 52% year over year. So they're growing really well. And this is, at the dawn of some of their big partnerships, like the partnership they have with Amazon now.
Right. Yeah. I mean, I think you would expect the first earnings release post IPO to be, they should have had that pretty well teed up before they went public.
Right.
And yet 50% growth in membership is pretty impressive, no matter who you are.
Yeah.
So, yeah, I think it's good.
Into pharma. Eli Lilly shares slide as weight loss pill results dent enthusiasm. This to me felt like one of those irrational Wall Street expectations.
I wanted to return to because Emily and I talked about it last week.
Okay.
And I was impressed with the pill results. I don't think I expected the weight loss to equal the shot. It's a lot easier form factor, a lot bigger market.
Did they want the pill to outdo the shot?
I don't know. So we were talking about it as a success, and then the stock tanked, and so I wanted to come back to it and just mention it. I think Lilly's performing well. I mean, yes, maybe it didn't perform. The pill didn't perform like people had it. They were predicting 13 to 15%, and they hit 12. I mean, to me, I don't think that even matters.
That's just silly. And the shares took a 14% hit for that?
Yeah.
That is so, like, I don't understand. How do you tie that 1 to 3%, miss on the body weight loss to like a 14% haircut on the value of the company? Like that those are the kind of things where I'm just like, this doesn't make any sense.
I don't get it. I mean, I think that for me, I'm not on a GLP-1. I don't really need to lose a lot of weight.
Yeah, but when the pill comes out,
when the pill comes, I'm going to take it. Yeah,
right.
And so I think the market share or the market opportunity is large, and I don't care if I'm going to lose 12%, or 13%. I mean,
It's a pill.
I don't even want to lose 12%. I mean, I'm looking to lose like 10 pounds on 180. I don't know what that is,
There's
but
just
it's
such
not.
a massive difference between a shot that you have to self-administer and just throwing one more pill in there with your multivitamin
Right,
in
right.
your,
Yeah.
like it's just.
It's a. Yeah, I agree.
And anyway, to me, I was just expecting like it's like either it's remotely close or it's not close at all. Like if it's not close
If
at
it
all,
didn't lose weight at all, then
that
okay,
would-
fine.
yeah.
Yeah,
But-
right.
yeah, seems like an overreaction, and probably an overreaction that will get worked out in the coming week.
Yeah, probably. It probably was a buy opportunity for a week, and then it will come back.
Then it'll come back. Yeah. Bayer and Kumquat Biosciences team up on a new potential cancer drug. It's a $1.3 billion royalty deal. And I think, the good news here is that Bayer needs better oncology, portfolio. So
yeah, and this is there's a new structure that is we've covered it before, is merging where they're not acquiring these businesses but are kind of licensing. They typically, I think if it's $1 billion to $2 billion, it seems like it's trending more toward licensing deals now.
Yeah. Instead of acquisitions of the portfolio.
Yeah.
Okay, going into Web3 and crypto, Bitcoin market cap soars past Google's after hitting all-time high. This was 6 hours ago, but this week, Bitcoin and Ether have hit all-time highs, and really Ether has had a tremendous run over the course of the last 3 weeks.
Ether's probably up 30% in the last month.
Yeah. Mostly because it was oversold and devalued for too long, just based on leadership, right? It was the Ethereum Foundation and some other things like that. But now that Trump is in, and also I think now that the Genius Act was approved and people have sort of done the math in their head and they've realized the majority of stable coins are going to traffic on ETH.
Yeah.
Right?
Yeah, I think it's good to see the market attention filter down from Bitcoin. And Bitcoin's it's always the biggest one. It's the original one.
Sure.
It's the one that my mother knows. But it's good to see that it's beginning to flow through to ETH and to all the altcoins.
Yeah, absolutely. Crypto firm Circle posts loss and first earnings report after IPO. So it seems like people now kind of understand the stablecoin business. They understand that it's not that defensible. Many others are going to enter it for sure. It's not in this article, but Circle recently, this week, I think, launched their own L1 network. And so the Circle share price has corrected quite a bit. So tremendous IPO, right? Entered in just around $80, went up to north of $250. Now it's back down below $150. And so the market's trying to understand this new type of business. It's never had to do real analysis on before. So it's to me, I just see this as Wall Street is learning how crypto works.
Yeah, I think that's right. It's a great business model, but there's not a lot of moat to it.
No.
So, and Circle for a while was positioning themselves as the U.S. stablecoin darling, but there's going to be 100 banks and Walmart and Amazon and people with their own stablecoins. So they'll get their share of market, but yeah, people are trying to figure out, well, what is that share going to be? Is it 10% or is it 40%? I don't know.
And for the listeners who have no idea what it means when I say Circle is launching their own L1, in the crypto world, you have these different chains. Bitcoin, it's a token, but it's also a chain. It's also its own network. Ethereum is a token, but it's also a network. And an L1 means you are the foundational network for everything that happens. You actually can have networks running on top of networks, right? So you can actually have the way that maybe you might think about it is, there's the internet. And then there's different protocols that run on the internet. So your web browser, that's one protocol that runs on the internet. Email is a separate protocol that runs on the internet, but they both run on the internet. Okay.
Right.
So an L1, you can kind of think about it like the L1 is kind of the internet, right?
Yeah. And I think one of the things I want to do is just weave in a little bit of education in the Web3 space as we go. So the layer one, the L1, it really is keeping track of transactions in a way that is safe and authenticated and prevents fraud.
Yes.
That's the basic function of the L1.
Yes, it's the security layer.
Yes.
Right.
And so there's different ways to authenticate or make sure that when I send you money, I can't then send it to someone else.
Yeah.
That's the basic thing. Like, can we make sure that when Vic sends Marcus the money, then Marcus has the money and I can't respend it?
Right. Yeah. So in that respect, it's security and it's also settlement.
Yes,
like it finalizes the transactions.
Yeah. And there's a trade-off between sort of cost and security and a whole bunch of different L1s that we don't get now about how you would go about that.
Right.
Yeah.
And adoption, right? And so
Bitcoin and ETH both are probably the two biggest market cap L1s.
Yes, for sure. And many other organizations. So for example, Coinbase and Robinhood, right? Two big exchanges and where you can go buy all your crypto. They each have their own L2, right? They each have their own layer 2 where you can do all sorts of things in the Coinbase universe on that network, but it settles and it's secured by Ethereum as the L1. Same with Robinhood, right? They have their own little L2 network, but everything is secured and settled on the Ethereum network. So Circle launching an L1 is like fundamentally competitive with Bitcoin and Ethereum. I don't think they actually are setting out to do that. I think they're probably going to go do business to business deals and maybe compete with, the Swift network or compete with the Visa and MasterCard networks and try to figure out some way to like get into the business to business merchant world. If I had to guess, like why would they launch their own L1? It's probably something more like that. Maybe you get some price breaks or some benefit for using their stable coins on their L1 versus using it on other L1s.
It can create a moat or switching costs.
Yeah. Yes.
If depending on how they structure it, it also is hard to do. So
it's super hard to do.
The reason there are no competitive barriers in stable coins is you can turn them on quickly and they're easy because they're using another L1 to settle.
Right.
And when they do their own L1, people like me are going to want to know, well, how are you securing that? Yes. And I may be excited about it. I may not trust it.
Right.
I know I trust Ethereum. So I think that's one potential reason is if they do it right, and it was really secure and inexpensive, like Solana, for instance, was or L1 that was created because it was less expensive and faster than Ethereum.
Yes.
And that has some use cases.
Yes. Bullish stock stores in latest test for IPO market. So Bullish is another crypto exchange.
Classic crypto name.
Yeah, you and I didn't even know about it up until this IPO, and it's got like $3 billion in volume on it. So that just shows you like how unevenly distributed the future is, right? I mean, I feel like we're pretty on top of stuff.
Yeah. Yes.
And we didn't know about like a massive exchange that's now publicly traded until it IPO'd.
Yeah.
It's ridiculous.
That's right. I think it's also true that there's just a lot of wealth and money that is trying to find a way to access crypto through various means. I mean, I think strategy and the Bitcoin treasury things and the ETH treasury are a flavor of that. And then this IPO, that's part of the reason it did so well. There's not that many pure play crypto things to buy.
Yeah. Just for people who continue to think like this crypto thing is like this weird, crazy thing that the tech bros are doing, the Bullish is led by the former president of the New York Stock Exchange, a guy named Tom Farley is the CEO of this company, y'all. So like, this is not like a toy. You know what I mean?
And we're going back.
No, we're talking about it because this is the future of finance.
Right.
We're trying to make sure our listeners understand this is the actual future of finance, people. Right.
Yeah, I mean, we've been following it for 8 years. We didn't bring it to the podcast until 8 weeks ago.
Yes, exactly. Coinbase, this is a post from X. Soon you'll have access to millions of base assets on Coinbase with DEX trading. Base assets, Base is Coinbase's L2 network, right? So that's their own network that they run. They are way ahead of pretty much every other L2 at this point. So many different assets that are on Base. It's incredible. It's become really a very friendly network for creators, right? And so one thing, like if you trying to kind of think about how might this impact the future, it's possible that a lot of the creators who are on YouTube and on X and on these different social networks where, they get paid out like ad payments, but they don't have any ownership of anything. You could see a YouTube launching on Base where there's true shared profits and retained ownership of your intellectual property that you put on the network as a creator. So that to me feels like that's a great that's a great step forward. And so Coinbase is now launching a decentralized exchange where you'll be able to trade all these different creator assets. And right now it's small insofar as like it's nowhere near Mr. Beast or any of those kinds of things. But just watch this space, right? Watch this space.
Yeah, and we're gonna get, I think, I don't know if it'll be Mr. Beast, but one big creator will come and then it will start to evolve.
Yes, and they'll come because the financial assets.
It's good for them.
They'll come for two reasons. One, the financial upside is significant, and two, their brand will be strong enough that they can actually onboard people to these crypto networks.
Right.
Like they'll be able to say, "Come follow." Download this app and get my special thing on Base, and that will drive more and more adoption. Right?
Yes.
Okay, moving into AI. Oracle Health debuts AI-powered EHR designed as a voice-first solution embedded with agentic AI. So this is the rebirth of Cerner. It's finally here. And of course, it has ambient listening embedded. Right. So voice first. I mean, that seems like a perfect tip of the spear feature to define the new era of Cerner
should have
with.
That.
Yeah. We don't need a plugin because we're coming out of the gates with that. And look, this is great for the market. Oracle is moving to Nashville. They recognize they're behind Epic, and so I think they're going to be very partner friendly.
Yes, that's right. And we had Seema Verma on 6 months ago talking about this.
Yeah,
and they've delivered everything that they were talking about that they were going to deliver. Now is live, and I haven't actually got a demo of it, but I'm excited to check it out. I think it's going to be really healthy to have someone to keep Epic honest and push the market forward, which will be good.
Agree. Okay, two stories about state laws and AI. So Illinois bans the therapeutic use of AI without clinician input. So there must be a clinician in the loop, basically. No autonomous AI coming up with diagnoses.
Yeah, and I think I'm in favor of that, except that it's not well defined. So okay, but like, what does that mean to have a human in the loop? When is it enough, and when is it not enough? And then is Illinois going to have a different rule than Michigan and different than Tennessee? It seems like that's not going to be functional.
No, and just the reality is that Illinois is great state of Illinois has a governor who is one of the big enemies of Trump.
Yeah,
this will become a flashpoint. David Sachs will use this as a perfect example of why we have to have federal laws for AI, because we can't have, I would say actually a combination probably of David Sachs and RFK Jr. will probably come together and say, this is exactly why we have to have federal legislation on AI, because we can't have the states creating this patchwork where innovators don't know how to deploy.
Right.
Multi-state operators don't know how to create a model of care that's consistent in the different states that they operate in. And so this is like, to me, this is you're feeding the beast here, right? You're feeding the beast with this.
Yes. And so they walked into that trap maybe, but it was very predictable.
Yes. Pennsylvania lawmakers seek to regulate AI in healthcare. So this has not yet gone across the line. But it just shows the states are not waiting. They're not waiting.
No, and Shapiro's the same. I mean, another Democratic, pretty strong governor, and he's wanting to begin to have a voice. They both want to have a voice of how AI should be regulated.
Yep.
And that's sort of the American system to test things at the state level, but AI is moving very quickly, so it's going to have to be considered, but then we're going to need a federal law.
I mean, to me, so I just think about the political timing of this, right? So to me, we have another legislative session that will occur before the midterm, right? Yeah. And I think that this just feeds the this feeds the prioritization of the Trump administration to push into that next big legislative push, federal legislation for AI in healthcare. That's basically what I would expect.
Yeah. I mean, there'll be a push. Whether they can get anything approved or voted through Congress is a question. But yes, I think they'll be working on it.
They're shooting the lights out right now.
Yes.
They're shooting the lights out right now. That's why I said before the midterm.
Yeah. Well, but you have to, if it's not a budget reconciliation, they got to get to 60, which is a different bar, but maybe they can do it.
Yeah. OpenAI's rocky GPT-5 rollout shows struggle to remain undisputed AI leader. So 2 big things here. One, I watched it. It's not just that that GPT-5 was underwhelming insofar as like it was not the step change that 4 was to 3, right? So there's that part, right? There's the part where we're starting to feel like we're maxing out what the LLMs are able to do, which I, for one, welcome, because none of us have integrated these damn things into our workflow yet. So yes, I know.
Yeah, the capabilities are way more than we can use.
Correct.
Today.
Like we need a breather to like actually figure out how to integrate these things from a business perspective. But the other thing was that it was just a bad. It was a bad attempt at doing what Apple does so incredibly well. I mean, I watched it and it was painful. It was just bad.
Yeah. It. I mean, Steve Jobs is an unfair comparison, right? But unfortunately, that's the bar that someone like Sam Altman
has
is
set for
held
himself.
To. Yes, right.
He is the leader of the company with the fastest growing product in the history of the world.
Right.
So,
and they spent a long time talking about healthcare topics, which shows how important the market that we're all in is to society and is to OpenAI. But it was underwhelming. It wasn't very impressive.
Yeah,
and then they also took away all the other models, and that's what people were really upset with over the weekend.
Oh yeah, they took away the 4 models, and 5 is fundamentally different, and people had relationships.
People
with
had
4,
all of these,
and it behaves differently.
Relationships and business things, and in one day they took it all away. So they've returned them all.
Well, it was stupid to not anticipate that.
Yes,
that was they won't do that again.
Right.
They won't do that again. Right. All right, David Sachs on X, basically taking a victory lap for what and you and I have listened to AI to All In for a long time, so we have to admit this has been his point for a long time. I mean, before he was even on the Trump train, he was saying that we don't know yet how the AI thing is going to play out, and it really is. It's good that you put this right after the OpenAI story, right? Basically, he's saying, look, the LLMs are all becoming commodities, and they're going to be deployed to everybody. We're going to have a mix of open source and closed source. And now it's a race to figure out how we all implement them in our businesses and how different people embed them in their software. And it's going to be great UI and great product that's going to win. And it's kind of just a step change up for all, for the entire technology ecosystem. And it's not AGI yet. And in fact, maybe LLMs are not at all going to be how we get to AGI. Like there may have to be a whole nother step change before we get to AGI out of the LLM model, right?
Yeah, I think that's right. So I think there are 2 important points. One is that there's multiple companies that are all competitive, and that's what you mentioned. And then secondly, that they're beginning to have specialties. Like I think Anthropic is probably best known for its coding strength, where Google Gemini is probably one of the better video things with their VO thing, and OpenAI ChatGPT is sort of the market leader as far as size, scale. Probably the brand is best, and that's healthy to have different little niches that it'll change over time, but I think probably good.
Yeah. So Elon comments on it. Mark Benioff comments on it. So it's an interesting thread. Link will be in the show notes if you want to sort of see the discussion and see the details of the case that David Sachs is making. But I think certainly
as we think about nationwide regulation, this perspective, is going to be the Trump perspective.
Absolutely.
And it's pretty much a hands-off, reasonable safety controls, but not too much control after that, I think.
Agree. Wall Street Journal, I feel like I'm going crazy. ChatGPT fuels delusional spiral. So more and more of these stories of people that are in what I would call ill-advised manner, getting into relationships with this technology, right? That is what it is. Getting into relationships with this technology because the technology performs and engages with us at the level of voice, right? Or at the level of, texting conversations, very similar, but it is not a human, and it's going to do whatever its programmers kind of tune it and train it to do. And oftentimes it's sycophantic. Right. Oftentimes it's encouraging things that, you wouldn't want a human to encourage another human to do, right? And it's unmonitored.
Yeah, I mean, it's very much like social media. It's designed to maximize engagement and time using the model. And the best way to do that is to be a sycophant and say how brilliant my idea to travel faster than light is. And no one has ever thought of that. And I'm going to be famous. And then it's sort of you get this iterative process where it gives the person a few other ideas that are, plausible maybe, but don't actually stand up to scientific rigor. And so there's stories in here with people inventing new physics, and they're talking all night about how they're going to do this, and it will be wonderful for humanity, and they'll be famous and win the Nobel Prize. And it's not real. And unfortunately, they stay up all night talking to ChatGPT, and then it doesn't come to anything. And a lot of these chats are public, which is crazy. So then the people allow it to be publicly searchable. So the Wall Street Journal, what they did is they went through public records, and you can see the long, involved discussions about inventing new fields of science.
Yeah, man.
It's just a cautionary tale. I mean, I think one has to remember that this tool is designed to make you feel good emotionally and to ask the next question. That's all it's designed to do.
Yes, that's right. I feel like as a PSA for our listeners, I want to let you know that there is there's an app called Ollama, Ollama, like llama, but with an O at the beginning. This is an open source free tool. You can install. I think they have a version for your phone now, but you can definitely install it on your laptop. And it will download the open source LLMs, the most popular ones. Yeah. The three most popular ones are Llama, DeepSeek, and then also now ChatGPT's
their OSS.
Their OSS model. And it'll give you like a desktop app. You can talk to an LLM that's high quality, but it's local to your machine. It's not on the internet. It's not feeding information back into the cloud. And now that ChatGPT has an open source model, like you can chat with a ChatGPT model that is not connected to a server, that Sam Altman does not have access to your information, okay? Where the New York Times can't find your stuff. So I just wanted, I wouldn't have really put that out there before the ChatGPT open source model was out there. But now that that's out there, for people who just feel like they want to talk to a ChatGPT-like model, you can do it for free.
Yeah.
For free. And
the laptop
privately.
doesn't even have to be that big.
No.
It's a regular laptop.
No. So yeah, like if you're just creeped out by the cloud nature of this, which is something that I am, I mean, I talk to Gemini because it's for work stuff, but this is what I use when I'm like, when I want to engage with ChatGPT locally now, I'm using Ollama. So there's a PSA, just check it out.
Yeah.
It's free. It's free too. That's also nice. On TechCrunch, AI companion apps on track to pull in $120 million in 2025.
Yeah. So the next step is to sell people not just how smart you are, but also companionship. Yeah. Or I want to say dating-like services, but it's a computer, so it's not really dating.
No, dude, people are marrying these things now. Are you kidding me?
Yeah. So
just say the words. Dating.
It's a romantic relationship with a computer code, but people are really getting involved with it.
People are doing it.
Yeah.
Yeah.
It's the movie Her, but it's real. It's actually happening.
And like, it's not just real. It's happening a lot. Like $120 million. There's people doing it on free apps. This is just a marker of how many people are willing to pay for these like tuned up models. And not just, there's already people that are having their marriages broken up over relationships with ChatGPT.
Right.
But if that's not good enough for you, you can pay for one of these companion apps that's tuned up, that's got the visuals plugged in there, et cetera, et cetera.
Yes.
So no. It's happening at scale. It's not like a case here and a case there.
Right. And I mean, I have boys, you have boys. People get very concerned about pornography with
and that's old now.
And this is like supercharged pornography.
Yes.
Because the pornographic entity is interacting with you and talking to you, and there's a relationship-ish built there. But it's going to make people more lonely in the end. It's going to make you disconnected from society.
Of course.
And be really bad. But at the same time, I don't know how to stop it. So it's going to happen.
Yep, it's going to happen. All right, final story. New York Times. This story has made the rounds. So I'm really happy that the New York Times did this story because they have the kind of platform that can get the word out about this. The headline: Goodbye $165,000 tech jobs. Student coders seek work at Chipotle. It's both kind of covering the layoffs that are happening across all the big tech companies and the elimination of the entry-level jobs for fresh grads. And also a profile of a young woman, recent grad, who is literally hoping that she gets hired at Chipotle. So to me, there's two levels to this, right? One, these jobs are being eliminated, and it is the degradation of, everybody learning to code. Remember that?
Yeah. I mean, 15 years ago, that was maybe the hottest thing. All these coding academies and
dude, I'm here. My entire life is the way that it is because I taught myself how to code.
Yeah.
25 years ago.
Yes. And then you moved into leadership and into investing.
Yes.
And your boys are not going to build the same life by learning how to code.
No.
I mean, it's just not an opportunity anymore.
No.
That has been automated away.
Yes.
Just like you can't, I don't know, make T-shirts in America anymore. Like there's certain things that automation has taken away, and they're no longer viable careers.
Yes. Then the second aspect is you have these highly qualified people are now fighting for jobs at Chipotle.
Yeah. Because there's no entry-level jobs. So it's.
I mean, can you blame Mom Donnie?
No. And it's not going to be just him. I mean, it's going to be nationwide.
No. I mean, it's like, if this is what's happening and people can't accept the gravity of this, right? Then I don't know. I don't know what to say. I don't know what to say. Like it just shows that denial is a river, like we will. In this talk that I did here on this week, it's just like a board meeting, right? The forcing function of having to present something, it will illuminate things to you that but you're like, holy cow, like, wow, like, when you have to produce a chart. So I was looking at an all-time chart for Bitcoin. And the chart that I got, it's ridiculous, right? It's not even a hockey stick. It's just, there's very little white space on it because it's just all value creation, right?
Yeah.
But the craziest thing about this chart is the y-axis. In order to make the chart reasonable to see, the y-axis has to, every number is a double, right? So it starts from $0.005, right?
Okay.
So half a cent. Starts from half a cent to 100K.
Yeah. Right.
Doubling
in 15 years.
Yeah. And the chart, in order to be able to
fit it,
show it, in order to fit it, it's got to scale by doubling that number, right? And still, when you look at it,
it's not a straight line. It's an exponential axis, and you're still going up. Yeah.
The curve is ridiculous. And with all of that, and we're talking about over 15 years.
Yeah.
Right. The chart spans 15 years. And even with all that, you still have people referring to it as like this risky speculative thing, right? Denial is a river, dude. You know what I mean? Like it just gets to a point where people refuse to accept that change is the only real thing. And just because you knew something does not make it an immutable law of the universe.
Yeah, and I think that it's the difficult thing is that what should we tell? Like, what should I tell my boys? I mean, they're 20 and 18.
The truth. The truth.
The American dream of get an education, work hard, which is both of our stories. Neither one of us came from like wealthy families, but we worked hard and educated ourselves and kind of were able to build a life. That is not the same as it was when we were coming up. And there's nothing that's replaced it, really.
Entrepreneurship.
And
a very, very, very low cost of launching a company. That has actually replaced it. But you're on your own. So in terms of like what hasn't replaced it is a system that will take care of you.
Yeah.
They're like, you're on your own. But the tools that you have to do it on your own.
A lot more tools. Yeah. You never had as many tools.
Not even remotely close, right? Like this phone now is, can literally make $100 million on this with a phone. So what you should do, and what I'm trying to do, it's like we should teach our children entrepreneurship. I will sign 2 copies of my book and give them to your boys.
Right. Yeah.
And we should get them hooked up with Olama, which is free.
Right.
And teach them to build some stuff, and then give them a bunch of credits to the LLMs, and tell them, sign up on all the social networks and turn on, the creator accounts.
Yeah. And you got to build something.
You got to build something
that people want.
You got to build something. Yeah. You got to build something. That's literally what we should tell them, And in the meantime, like, go get whatever super low earning job you can and live within your means and roommate with your friends and pick good friends and get in a relationship so you're not going out, on a million first dates.
Yeah.
There is going.
Yeah, but you have to build it yourself like an entrepreneur.
Yes.
Learning to code or going to this college or whatever, going to Wall Street, those pathways are all changed.
Yes.
Now.
Absolutely.
Yeah.
Absolutely. But look, the truth is they don't need, look, I sent my boys to college, you're sending your boys to college. But
they need to grow up, but they don't need the degree.
They don't need the degree. And I don't know, the kids who are 10 years younger than your boys, they really just probably don't need to go to college. Right. They probably just don't need to go to college, right? They probably just need to, they can save that time. They can travel, flights are cheap. You know what I mean?
Right.
Travel, go see the world, go learn a language, go realize that the way we do things in America is not the way they do things everywhere else in the world. Learn AI, learn entrepreneurship, learn how to create value, build some stuff.
Like the university thing that we did, it's kind of packaged several benefits all in one.
Yeah.
There's going off and living on your own and learning how to feed yourself and get clean clothes and exist.
Yeah.
Then you had to learn some skills.
Yes.
And the ability to talk to other people and think for yourself. And I think writing is still valuable to figure out what you actually say. You were putting together a talk, you have to actually figure out what am I going to say and how do I express myself.
Yes.
But you can do that on your own now. You don't need a college degree to do that.
That's right.
It just is more work. You have to assemble it yourself.
But
it's a lot cheaper.
But
you don't need to spend $80,000.
Yeah, no, but it's really not more work. All of the top universities have all their courses for free on Coursera or YouTube.
Yeah.
You see what I'm saying? Like, it's just what is more work is...
Yeah, but that's so, like, there's not, you have to go find somewhere to live and, you know, all the stuff that's paint by numbers with the college. You show up there, they have a dining hall, they have all the stuff that you have to put that together yourself.
Yeah, but you go in debt.
Yes, right. You save a lot of money.
And you do it at the exclusion of the entire rest of the world.
Right. Yeah. I mean, if you spent the amount of money you spend in college, you could travel all over the place and live
Or you
well.
could invest it.
Yeah, right.
Or you could invest it and literally retire in like 15 years.
Mm-hmm. Yeah.
You know what I mean?
Yeah.
Like,
yeah, that's right. I think the kids that are 5 today, I think almost have it easier than the kids that are 15 to 20.
yes,
Like,
yes.
there's not,
We're in transition.
there aren't examples to follow right now.
We're in the transition.
Yes, right.
And I guess that's why I'm saying, like, could you spend this time crying and bemoaning the loss of what was? You could, but it is in vain. It is
not gonna
literally
help.
in vain because
Right.
nothing stops this train.
That's right.
Right. So that I want my boys to be okay. I want them to you know, and then and then you know, quite frankly, the other thing we have to do. So, you know, I've had some pretty hard conversations with my parents recently about like how, you know, and we got to the other side. Now all the conversations are good, right? But we had to have some hard conversations about like how are we going to really handle this, like this stage, right?
Yeah.
Like independent living, assisted living. Are you going to be in the house? You know, like really tough conversations.
Yeah, there's loss of independence, all kinds of stuff. Yeah.
So we decided we're going to go for it and try to keep them in the house all the way. Like, and I'm fine with that. Like, you know, because you got to make some adjustments to the care. You got to figure out some things, right? But in that process, you know, I was having conversations with my parents, and my dad said to me, and this was a really healing because I knew it, but it was nice to hear him say it. You know, he said to me that, you know, son, what you're doing, nobody taught you because we didn't have to do this for our parents, right? Like, you know, you're the first generation that is having to do for us what you're having to do. And so you're learning it. This happens, you know, it happens where over time, as generations go, like, you know, we create things, we create innovation, we create, you know, abundance, we create these things. And like, okay, now the parents are living really long, you know, but like they're living really long, but they're not well, right? You know, hopefully when we get to that age, we have not just lifespan, but health span.
Yeah, right.
You know, that's what we're going to try to work on, as well as financial independence so that our kids are not burdened with the caretaking. But we can only
but our
know
parents
that
have lifespan, but they're not going to be healthy.
they don't have
the whole
health
time.
span.
Right.
They don't have health span because they were in medicine 2.0, not 3.0, right? So it's just like every generation has their thing. Yeah. You know, and this is just what our kids.
Yeah. There's no, it's not good or bad. It just is.
It just is.
Yeah.
It just is. So like they're old enough that my boys are 26 and 24. They're old enough for me to just be like, listen.
Right.
You know what I mean? You know, first of all, you guys are so lucky that I'm your dad. You know what I mean? Because like, at least I can like explain to you what the hell is going on. You know how many parents can't even like explain to their kids what's going on right now? So if I can do it, I should do it. Yeah. That's my view.
Yeah, I think that's right. And they'll figure it out. I mean, every generation figures it out, but it's going to be a process.
Yeah. All right.
So, all right. Good show.
Next week, we will be in our new office. Not just going to matter to any of you who are listening, but if you watch, I think the backgrounds and things will be different. Yeah. We're just moving up the street to the new Industrious over in Nashville Yards, which we're pretty excited about. Brand new digs.
Yeah. We finally have the new studio.
Yeah. All right, man. Until next week.